Hey everyone, College Investor here with the first video of this earnings season, and it's Netflix. It's actually up quite a lot after hours, around 6 to 8% at the time of making this video, and that's because they beat on earnings per share. They still lost subscribers, but much less than what was anticipated. If you remember last quarter, they said they expect to lose around 2 million subscribers. Well, they lost just under 1 million, so glass half full, I guess. But revenue was a small miss, but we're going to have a look at all of that in this video. But before I do so, if you want to support this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor. Do check out all the other links in the pinned comment. Some of it might actually save you some money to maybe pay for Netflix subscription. All right, so let's dive straight into this. So revenue came in at just under $8 billion. Year-over-year growth of 8.6%. Now, I do want to mention something that you will hear a lot during this earnings season, and that's the impact of foreign exchange, because a lot of companies have, well, the majority of their business outside of the United States. And since the US dollar is extremely strong, those businesses will take a hit in this quarter and probably in the next coming quarters as well, depending on how strong the US dollar remains. Now going back here, so operating income, $1.5 billion, operating margin just under 20%. They still expect, I think, 20% for the full year. Net income of $1.44 billion, diluted earnings per share, $3.20. They were expecting, I believe, $3, so quite a nice beat there. Well, a small one, but a nice one. We'll take it in this current market. Global streaming paid membership, 220.67 million. So yes, this has been the second quarter in a row that they are losing subscribers. But in the next one, they expect to actually gain 1 million subscribers. So whatever they lost in this quarter, they expect to recapture by the next one. Now, as for net provided by operating activities, $103 million. Free cash flow is positive, $13 million. Not a lot, but at least they're still positive on that front. They are still on track and they still believe they remain free cash flow positive from here on out. Now I'm gonna jump straight to the regional breakdown before touching on, well, the most interesting points in this letter. So UCAN streaming obviously is one of the biggest part out there. So there you can see that the majority of the lost subscribers comes from there, minus 1.3 million paid net additions. So, well, it's also the most competitive market, so it makes sense. As for EMEA, you can see here paid net addition and negative 0.77. So another chunk comes from that area, because in LATAM, they gained a tiny bit, 0.01 million. And in APAC, they actually gained the most, 1.08. And it seems that they never really lost any in that region. Now touching on their content. So they gave us this graph right here. They compared Stranger Things for volume 1 to Obi-Wan Kenobi and Top Gun, which was a movie. So, well, movie and TV shows not really comparable. But the cumulative Twitter volume, you can clearly see that Stranger Things has, well, been explosive, and it has been the most popular out there. More specifically, you can see here the season 4 generated 1.3 billion hours in the first 4 weeks, making it their biggest season of English TV ever. Then they talk a bit about the power of Netflix content, and if you've watched the TV show, you probably know what they're talking about, especially the song Running Up the Hill, right? It topped the chart, it became super popular, and then if you watched the last episode, you probably heard the Metallica song as well, that has also gone up the ranks in the music world. So that's the effect of Netflix, and that's the effect they have on pop culture. Now, they also announced that they will be acquiring the leading animation studio Animal Logic. Animal Logic is known for, I believe, the Lego Movie, Happy Feet, and some other movies as well. So not a small company. And this will basically help Netflix make much better animated movies. Now, the last one I actually watched is The Sea Beast. To be honest, a very good movie. And if it wasn't on Netflix, I would have thought it's probably a DreamWorks or a Disney one. It was that good. Then they show us this graph. This graph comes from Nielsen. So the share of US TV viewing, this is in the 21-22 TV season. You can clearly see that, well, Netflix is not dying, not even close. By far the leader in minutes viewed. These are billions actually, right? CBS, NBC, ABC, Fox are all after Netflix and still in front of Disney Plus, Prime Video, Hulu, and Apple. So this is pretty convincing, especially if you're a Netflix shareholder, which by the way, I am not. I'm just a big fan of their content, bar a couple of garbage shows. Now, obviously, you've probably watching this video. We've talked about that in the Microsoft and Netflix video a couple of days ago. So yes, they announced their partnership with Microsoft. So they will become their sales partner to launch that ad-supported tier. And they expect this to launch in the early parts of 2023. Now, exactly when that will happen, we don't know. It could be Q1, could be Q2. My best guess is hopefully Q1. Now, with regards to advertising, you all know my thoughts on that. It is a must, and it was a must for a while. And I'm happy that Netflix has finally, well, that Reed Hastings has finally come around to realize that, well, giving people the option to pay less, still get the great content, but to watch ads is not the end of the world. And then, of course, they'll start in smaller markets and work their way up, testing out the waters, probably in smaller markets than in bigger ones, and A/B test that as they've been doing with the paid sharing one. Remember, last quarter they said that over 100 million households are actually sharing Netflix accounts, so they're not really paying for Netflix. So they are been working on, well, a couple of approaches, adding the other households to your subscription by paying, I think, $2.99 or something like that. And last thing I want to touch on is exactly this, cash flow and capital structure. We all know that Netflix has and had in the past a lot of debt, a lot of expenses. So now that the company is a bit more mature, and now, as they say here, 60% of their net content assets on the balance sheet are Netflix produced, so in-house Netflix originals, which is much better for the business. As you can see here, and this is a mouthful, cash content spent to content amortization ratio has come down from its peak in 2018 and 2019 as more and more production is in-house and not, well, licensed. And so to conclude this video and to conclude this quarter for Netflix, again, I'm not a Netflix shareholder, but I'm very happy to be a Netflix subscriber. And I'm a big fan of what the company is doing. Very happy to see that they are going into advertising because, again, there are probably many people out there that cannot afford Netflix, or maybe that they have other streaming services and they would like to add Netflix, but it just becomes too expensive. So that's a great move. And obviously, as we've talked about in many other videos, connected TV, digital advertising is, well, those dollars are flowing from linear to connected TV. And, well, if you're Netflix, you obviously know that a lot of brands and a lot of advertisers will come in with their dollars to spend on the platform, because as we've seen, 1.something billion hours viewed in the first 28 days when they launch a super popular TV show. It's very lucrative for advertisers. So overall, I think this quarter we were all expecting, well, doomsday scenario probably, right? They expected to lose 2 million. They lost just under 1 million, which isn't great, right? Which isn't great, but it's much better than expected. And the fact that they are planning to add 1 million in the next quarter. Now, again, this is raising the bar a little bit, not that much, because, well, this quarter the bar was extremely low. So to beat that is good for the stock. Next quarter, 1 million. If they miss that, well, the stock will probably go below as well. But this quarter, to be honest, it's better than what most expected. And it's a good start to the earnings season because, well, the overall market and probably the stocks related to Netflix, the streaming world, are probably reacting positively right now. Obviously, do share your thoughts down in the comments below. What do you think about this quarter? Do you think this will positively affect all the other players in the market? Leave it all down in the comments below. And if you like this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And I'll see you all in the next one. Bye-bye.